Hi everyone, let's look at my 3 low time frame scenarios and explain which one I prefer. Starting with the very bullish scenario where this is a yellow wave 1, yellow wave 2, and then we have another 1, 2, 1, 2, expecting a lot more upside. In this scenario though, this wave 2 is very short in time, not gonna lie, and if we zoom in, this wave 2 did not hit the 0.382, which is a rare target. However, if we do zoom in at least a little bit, we can see that this blue wave 1 with a blue wave 2 bounced currently perfectly on the 0.382, which is a rare target for wave 2. So that is absolutely fine. And then we would expect more upside. In this scenario, guys, you do not want to see price reach this level again. Because if we would dump below this level, this is very likely not going to be the very bullish scenario. Also, the potential trading setup could have been, hey, I can enter at the 382, stop loss below over here, because that is the invalidation for this very bullish scenario, and then trade it all the way to the upside. But as you can see, actually the risk to reward, like it's a very big stop loss, risk to reward is not great. And then, yeah, of course, if this trade goes to 100K, in the end, it might be great. But in my opinion, the scenario that I'll show in a second with the trading setup over here was much better. Now, wave 2 ended over here just before the 1.618 fib time, taken from the low of this wave 2 to the high of this wave 1, which is fine. But then again, we now really want to see the volume going up, and as we can see, price is moving up. We see a little bit of volume to the upside, so that is at least a good sign. Then we go to another scenario that I have over here, which is more bearish, but in my opinion, not looking very good. In this scenario, we have a WXY, and then we have this as a bigger A wave. So this is a 3-wave, wave A, and then we need to see a 3-wave B before then eventually a big move C to the downside. In this particular scenario, wave B needs to be a 3-wave structure. So we expect some sort of a move like this towards the most common target of a wave B that we have hit at the moment. But as you can see, this looks to be more impulsive and not a very nice 3-wave structure, which is of course what you not really want to see in a wave B. And also this wave B took very short in time compared to this wave A, which also makes this scenario very unlikely. However, the trade that was part of this scenario is amazing, because over here we had the target area for wave Y, and I mentioned if we take the double bottom over here, the only way one can trade this is a swing failure pattern trade, meaning you take the liquidity, you close above, and then you trade it to the upside. And that is exactly what has happened. That is exactly what the setup shows. And now for me, reached the target, which is the double top over here. We basically took the highs, moved a little bit to the downside now. Very nice setup indeed. And if we then go to the more bearish scenario, which is still valid so far, we have this as a 3-wave move, another 3, and then another 3, and then a W or A. So now this move over here is a W or an A wave, followed then by an expanded flat ABC. Over here we can see wave B very well respected with the target area for wave B. And then this move to the upside is an impulse in a wave C, where the most common target area is the white box that you see over here. And also I could label this as an ABC expanded flat, this then being A, B, and then looking for a C to the downside in an expanding flat. We did hit the wave B target inside this bigger wave C target area as well. That's nice. And we took the double top. So in this scenario, this is still valid. And then one could potentially think of a short setup. But if for me, the only start of the potential short setup was taking the double top over here. And then if this trade was entered with the potential trading setup and your plan, your strategy and your entry requirements, very important, then the stop loss would either move down to the high over here or already break even, which then always is a break even trade or a winner. Then to the downside, one expect a very impulsive move in a wave C or a 3-wave move in a wave Y. Now, if I then have to think about what looks better at the moment, I think it is very important to note that over here, the more bullish sign is the fact that this over here was not a swing failure pattern. We didn't go above, wick above, close below, and then move down. No, we actually closed candles above the double top, above the liquidity, which is a more bullish sign in general. We closed a couple of 15-minute candles up here. We closed a 30-minute candle above. We also even closed a 1-hour candle above the double top, which is a more bullish sign. The more bearish sign was wicking above, closing below, and then moving to the downside. Of course, the bearish setup is still valid, but currently I will not be surprised if price will find its way to the upside to at least take these highs over here. And if we zoom in just a little bit, this could also be part of a 1, 2, 3, 4, 5, but then over here, this can be part of a bigger 1, 2, 3 4, 5, you see, and then maybe even another bigger one. So yeah, I wouldn't be surprised if we go up once more to take these highs, but we have to see how price develops throughout the day. My next update will be at 1 p.m. Central East European time. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.